What's up, my friends? It's late November now, and Thanksgiving is coming. Hope you enjoy your deal hunting, and feel free to reach out to me if you want to find real estate deal. In my last video, I analyzed the current rental market and housing price using Lutz and Wesley Chapel as examples, and I also talked about the unbiased market analysis approach. If you haven't got a chance to watch that video, you can find it in my YouTube channel or on my Facebook page. Today, I'll continue to analyze the current market from the perspective of supply, demand, and population migration. Lots of important findings in this video, so please watch the video till the end. Before digging into the data, I need to call out something. This video's analysis needs snapshot data of active and pending listing count for historical months. But the Stellar MLS doesn't have this kind of snapshot data easily available for users, so I have to rely on the public data provided by those major listing platforms. I use the data provided by Realtor.com here. The data quality and attribute definition among different listing platforms may vary, so I spent quite a bit of time on data cleaning, data preparation, and dual validation across those platforms, so that the data patterns I found from different platforms are consistent. Your thumbs up and subscription will be big incentive for me to continue making this kind of videos. Let's get started. In my last video, the Lutz and Wesley Chapel areas are in the Pasco County, so let's take a look at Pasco County's market in general. First, let's check the aspect of supply. People might have already seen lots of articles or YouTube videos talking about much more listing pop up now compared to early part of the year and years of 2020 and 2021, and conclude that the supply is now skyrocket and market crushed or is crushing. For example, in this chart of the active listing count by month for 2020 through now, we can see starting around the summer of this year, the active listing count does show significantly hiking, and now it looks like much more than the previous 2 years. But if I take a look at the active listing count for the years of 2017 through 2019, which I defined as a normal years or benchmark, I find that the current market supply is still way below those of the normal years. And I noticed that starting around Q3 of the year, the supply increasing started to slow down. Now let's check the demand aspect, the pending listing count, which indicates how many listings were under contract for each historical month. Similarly, if I only compare the current year's data to 2020 and 2021, I find that the level of pending count shifted down significantly since early summer of this year, and now it is much lower than those of 2020 and 2021. But if I check against 2017 through 2019, I find that the current pending count level is much higher than those historical normal years. There's another observation. In each of these normal years, the number of pending listings show a declining trend after each summer. This is a strong seasonality pattern, and I find that the current year's curve started showing this pattern as well. So, from the chart of the demand and supply, we can tell that the supply is still short compared to that of the normal years, and meanwhile, the demand is still stronger than normal. Let's consolidate these two aspects and calculate the ratio of pending count divided by the total listing count. We can easily see the trend that current year's curve is approaching the normal level, but still not there yet. The supply-demand is still not balanced, and we are still seeing stronger than normal demand. Let's also take a look at the price cut perspective. I calculate the ratio for the number of listings had price cut divided by total listing count. If I compare the current year's curve to those of the recent 2 years, I find the ratio is skyrocket, kind of insane. But if I compare to those of 2017 through 2019, the normal years, I find that it is about the 2017 to 2018 level, higher than 2019 though. Another attribute I'd like to check is the time a listing spent on market. Here is the chart for median days on market. Comparing all the 5 years the data, the story is very clear here. After the bidding war started around summer 2020, the days on market declined significantly. And this year, after the Fed started increasing the rate, the number of days start to climb back up. but the level now is still lower than normal, not there yet. So with all of this analysis, we can tell that the rate increasing did have significant impact. The market has been cooled down quite a bit compared with previous 2 years' situation, but the demand is still relatively stronger than the benchmark in normal years. So I can only interpret the current market as approaching normal, but not back to normal yet. What we can do is to keep monitoring the market to determine the future impact from the Fed. Population growth is an important factor for real estate market. So let's also take a look at the Pasco County's population growth curve. Here's a tip. On Google, type in the area name you want to search plus population. Google will show the area's population growth history for you. We can see that Pasco County has stable and strong population growth in the history, except for the few years after the 2008 recession. Let's take a look at Florida's population migration data. I find the U.S. population migration by state data from the North American Moving Services website and put together the migration data for Florida on this chart through the year 2021. Clearly, in the past 11 years, Florida has good amount of net inflow migration every year. Once the 2022 is completed, we can check the data again. Alright, all of this conclude my market analysis in this video. How do you interpret this data and chart? Welcome to comment below the video. If you like my video, please don't forget to give a thumbs up and share it, and subscribe to my channel. See you next time. Bye.